Let's turn now to the Fed Chair Jerome Powell saying Wednesday the central bank could afford to be a little bit more cautious as it makes decisions on interest rates moving forward, thanks to persistent strength in the economy. With us now to discuss, Jeanna Smialek, reporter at the New York Times covering the Federal Reserve. Jeanna, great to speak with you. Given those comments from Powell about the ability to be cautious moving forward, what does that tell you about what rate cutting is going to look like, not just in December, but heading into the new year?
I think the question is really about the new year. I think it's about what happens in 2025. As we saw in their most recent economic projections, Fed officials as of September had expected to make about 4 rate cuts next year, a full percentage point of rate cuts. And I think there are real questions about whether that's going to be likely, because back in September, what we know is that the Fed thought that unemployment was rising. They thought that the labor market was slowing pretty notably, and they thought that growth was cooling down quite a bit. And all of those trends have really started to reverse themselves. And so I think that is what Chair Powell was referring to yesterday. And I think that it really creates this question mark over just how much the Fed is going to be able to cut next year and just how quickly they're going to do it.
And so with that in mind, the expectations have sounded like we could be looking at maybe a cut once a quarter. But what is the data that potentially could throw that off? Is it something like if President-elect Trump gets in office and really prioritizes tariffs and that spikes inflation once again?
Yeah, so I think that there are sort of 2 buckets of issues here that are worth focusing on. The first is just, what is the economy going to look like? Independent of any policy coming out of the White House, we've already got an economy that is expanding much more quickly than economists expected. We have inflation that looks a little bit stickier, and we have a job market that looks like it has more resilience, if not momentum. And so I think that combination suggests to the Fed that, maybe its rates aren't weighing on growth and on the economy as much as they had previously expected. And I could see a world where that translates into slower rate cuts next year. And then there's the second bucket, which is whatever comes out of the Trump White House. And the Fed is saying at this point that it's just too early to tell. We don't know what tariffs are going to look like. We don't know how trading partners are going to respond. We don't know how corporations are going to respond. And so it's just very difficult for them to sort of factor that into policymaking. But if we do see wide-scale tariffs that economists expect to lift inflation or lift prices in a one-time way, that's clearly going to be something that the Fed has to take on board as it's thinking about what to do next with policy.
Yeah, absolutely. That catching the attention of S&P Global Market Intelligence as well, listing trade troubles as one of their own headwinds that they're going to be watching for next year as well in the global landscape and defining 2025. Jeanna, thanks so much for taking the time here with us this morning. Appreciate it.